So a public bank is a regular bank, and the difference is it's 100% owned by the people through their local or state government. And that's in contrast to most banks we know, which are private banks, which are owned by shareholders, right? So a public bank is really designed to serve the public good. And a private bank is designed to serve shareholders and to maximize the return for shareholders.
So it really should be a reflection of the values of the people. What we have right now with a private banking system is good luck to you if you go in and try to get a loan for a renewable energy project or sustainable ag or a co-op. Okay, those things are not funded by a private banking system, but they're a value of the people.
I should really mention that a public bank is different than a credit union, because a credit union, you voluntarily join a credit union, then you're a member of the credit union, but it doesn't serve all of the people in a particular location. So how does it work? All of the revenues from the government go into the bank. And then the bank, of course, has to pay the obligations of the city or the state. But like any bank, those deposits become the basis for being able to make loans many, many times the value of the deposits themselves.
There's one public bank in the United States. It's the Bank of North Dakota. It's been in existence 93 years. It's owned by the state of North Dakota. As a matter of fact, the state of North Dakota is doing business as the Bank of North Dakota. So all the assets of the state, the public assets that are owned by the people of the state, belong to the bank. Now banks, let's talk a little bit about banks, because there's a lot of misunderstandings about it. The only product a bank creates is debt. That's every dollar in your pocket, every dollar in your checking account is debt that somebody else has taken out. Okay, so it's a debt-based currency. That's what we have here.
We've been looking into who the city banks with, and all of our property taxes go into Wells Fargo. So with no control ourselves whatsoever, we're helping to fund private prisons. We're not very happy with that.
Deposits that are made by city taxpayers that are put into a Wells Fargo or whatever it may be, the credit is used, whatever it may be used for, but very often it's used to fund manufacturers or competing businesses overseas who then, take jobs from Americans who paid those taxes in the first place. So we're saying, look, there's a better way to do this. Let's take our money, put it into our own banks, issue credit to the people who generated that tax revenue, and keep the money local left.
We were really inspired here in D.C. by what the Public Banking Institute is doing, and really analyzing what is going on in the economy and where the leverage is to begin to create change. And some of us came together and said that a public bank creates a really important lever. What has happened and has moved it forward much more quickly than we had ever anticipated is that the mayor here in D.C. started something called Sustainable D.C. And he wants to make D.C. the model sustainable city of the country. Pretty ambitious. So some of us said, well, that's very ambitious. Where's your money coming from? And we have an idea, and that's the public bank. So we got involved in one of the working groups, the Green Economics Working Group. And now this is coming out of this process as one of the proposals.
We cannot really change the system. A lot of people are breaking their teeth on that. So what we suggest is we simply open up banks that belong to the people. They've done it in North Dakota. It's very common across the world. Germany has issued most of its credit through public banks, Barkhazen banks, as well as Landesbanks. Chile has a public bank. Nearly 90% of the banks in India are public banks. They're very common across the world. The reason why that China, there's a headline in China, if I had a presentation I'd show it to you, they're opening up 76 new airports in the next 4 years. 76 new airports. They're nearly doubling their capacity in terms of airport transportation. Why can they do that? The reason why they can do that is because China owns their own banks. We don't do that in this country. When our federal government needs to create money, it borrows money from the Federal Reserve, which is a private bank. we've given that power away to private banks. So what we're suggesting is that every community, whether it's DC or a state, can create their own public banks, publicly owned banks, and issue loans in partnership with private banks, the smaller community banks. And they do this in North Dakota. The largest loan portfolio, the segment of their loan portfolio is student loans. That's what they're investing in. They're investing in education of their people at 4.5%. Compare that to student loans of many people these days, it's 8 or 10%. Second category is home mortgages, and they put out competitive rates. And the third category is commercial loans. If anybody tells you that, well, it's banking in North Dakota, it won't work for this other part of the state, the top three categories: students, homeowners, and businesses. That's what they're funding in North Dakota. Agriculture is fourth. So some of their commercial loans are as low as 1%. Compare that to 16% interest rate for a business credit card issued by our friends at Citibank. And you cannot run a business with that kind of usury that's being charged, which is now legal in this country to charge as much interest as you want. When you look at what products cost, a piece of paper, a purse, a glass of water, it depends what it is, but 45% of the cost is interest.